The world's most valuable asset by market cap, gold, is hitting all-time highs day by day. While the price here is not an exception, should investors still buy gold when its price has nearly doubled in a year? For more, our economics correspondent Park Junan is here in the studio to tell us about the recent hike in gold prices and suggest options for wisely investing in gold here in South Korea. Good evening, Junan.
Good evening. It's good to be back.
So, Junan, a go-to spot for gold shopping here in Seoul is, as we all know, Jongno Jewelry District, and you went there yesterday. How was it?
Right, Dami. So yesterday I went to Jongno Jewelry District, where we could see hundreds of shops that sell gold, silver, and many valuable accessories.
Right.
And take a look at this. Look at what I brought today. It's a small pure gold pendant I bought in late 2023, weighing 1 don or handon, a traditional Korean unit used to measure precious metals. 1 don of gold is equal to 3.75 grams. And in fact, just yesterday on Wednesday, the purchasing price for 1 don of gold surpassed a historic 1 million Korean won, nearly a 5-fold increase in the last 6 years and a 20-fold increase in less than 25 years. Well, there's an old saying, seeing is believing. Let's take a closer look at a gold shop and factory I went to. The price of gold is skyrocketing day by day. And this is not just an upward trend that has been going on in the past few months. Even though the price of gold is rapidly rising, investors are actively buying it, an asset that does not decay, retains value, and is globally accepted.
My mother turned 60 this year, so I came to buy a gold bracelet as a commemorative gift. Gold prices have risen a lot recently, but I think they may continue to climb, so I felt it was better to buy it sooner rather than later.
The sharp rise in gold prices has been particularly evident over the last few years, and especially when U.S. President Donald Trump was inaugurated in January 2025. In the past 5 years, the price of gold has risen from around $1,852 per troy ounce to approximately $4,800. This is a 159.1% increase over that period. And when it comes to Korean won, the increase becomes far more pronounced. Over the same 5-year period, the purchase price of gold jumped from just 271,000 won per don, or 3.75 grams, to 993,000 won. That marks a 266.4% increase. Although international gold prices have steeply risen, the hike is seen more prominently in Korea, with the dollar value against the Korean won appreciating by more than 33% in those 5 years. Alongside that, buying physical gold in Korea can add 15% to the price due to value-added tax and labor charges. Now, as you can see, this 1 kilogram gold bar I'm holding is worth more than 265 million Korean won, or roughly 180,000 US dollars. The managing director of the Korea Gold Exchange, whose company produces and sells billions of dollars worth of gold and silver annually in Korea, says global uncertainty has driven the steep price hikes.
Global economic instability, ongoing wars, and uncertainty surrounding the U.S. dollar's depreciation have all combined to push gold prices sharply higher, with new issues continuing to emerge, including the situation involving Greenland just yesterday. Uncertainty is intensifying, and that upward trend appears to be gaining further momentum.
Looking ahead, long-term gold prices will be shaped by a mix of inflationary trends, interest rates, and geopolitical risks. Alongside this, global economic uncertainty and monetary policy will also be key factors affecting prices.
And Junan, many people see gold as part of their investment portfolio. Now, in that case, are there any tips for investors looking to, minimize their tax burden?
Right, Tabi. So minimizing tax burden is always one of the most important things when it comes to efficiently investing. The first option is, of course, buying physical gold. You buy gold bars or coins directly from credible shops. A good thing is that you own something tangible, and it's great for long-term holding or passing down as an inheritance. But the problem is that you might not make a profit out of gold unless its price goes up by at least 15%. It's because in Korea, there's a 10% value-added tax when you buy, plus an average 5% labor charge is already counted in when you buy a gold piece. The second option is using the domestic KRX Gold Spot. You can simply buy tiny amounts of gold through bank apps or your securities account without owning physical gold in your hand. For KRX spot trading, capital gains on price differences are tax-exempt, making it very efficient for most people. Not only this, you do not have to pay additional fees such as the 10% value-added tax unless you decide to withdraw the gold physically. Lastly, there are options using ETFs, both domestic and international. In Korea, products like gold ETFs trade just like stocks on the Kospi. When you sell a domestic ETF, the profit will be considered as dividend income, so you have to pay a total of 15.4%, including local tax on profits when you sell. An alternative option is using a US ETF like GLD that tracks international gold prices. Gains are combined with other overseas stock profits, and anything over 2.5 million won annually faces a 22% capital gains tax.
All right, Junan, thanks for sharing that wise investment advice tonight. Thanks for coming in.
Always a pleasure, Dami.